A very warm welcome to you as you join us on today's episode of Tax Matters. My name is Pearl Nemeka, and with me on the episode is
Chiamaka Ohawuchi.
Last episode, we began a discussion on transfer pricing, but because of time constraints, we could not conclude. And we did promise to bring you the conclusion on today's episode, and that's why we're here today. Mr. Gwajungwala is still our guide from last episode, and we'll be discussing transfer pricing.
The Federal Inland Revenue Service FIRS calls on all corporate organizations operating in Nigeria to register for the purpose of payment of taxes and obtain a tax identification number TIN. All registered companies must obtain a tax identification number immediately from the nearest FIRS office. You can also collect and return tax registration forms from the Federal Inland Revenue Service Engagement and Enlightenment Tax Teams (FEET) on compliance checks exercise in your area. A company which is yet to commence business after at least 6 months of incorporation must pay a pre-operational levy of 20,000 naira in the first year and 25,000 naira for subsequent years to obtain its tax clearance certificate (TCC). Note that filing and payment of VAT and withholding tax returns must be done on or before the 21st day of every month. Register for VAT. File all tax returns as and at when due. Be a responsible corporate citizen of Nigeria. It pays to pay your tax. This message is from the Federal Inland Revenue Service.
Mr. Gwajungwala, welcome once again.
Thank you very much.
To put things in the right perspective, what is transfer pricing, and could you illustrate with a few scenarios?
Imagine a company that says, I provide a service for my company in Nigeria, and I charge 10 million naira every month. And then you find out that actually that service was only performed once, and it was not repeated on a monthly basis. And yet you see the charges come in on a monthly basis, or sometimes on a yearly basis, when only it was done once, or sometimes the service was actually not provided. Another way you can look at it is a company in Nigeria that has many accountants as employees, and yet still pays accounting charges to a related person outside Nigeria. And so these are ways that transfer mispricing do occur in companies.
Oh, wow, very interesting. If if Nigeria did not issue the transfer pricing regulations in 2012, or if we were not tracking this mispricing as at then, what would we have been losing?
Yeah, like I said, what we'll be losing is money. And in the last few years that we started transfer pricing, the amount of additional revenue that has been gotten is not small money. And so all of those money will have been lost, and Nigeria will have been the loser. Not only that money, also those entities, because they are not paying the right amount of taxes, they could use that to begin to underprice in the market and drive out smaller companies. So not only the government is going to be losing, the smaller businesses will also be losing.
Now, still talking about the 2018 regulations, we are told that it took effect from the 12th of March 2018. Now, how is the taxpaying community receiving the new regulations?
Let me say that everybody had been very excited since the publication of the new regulation. Excited because it's people have seen it as game changer, that those who had been negligent in compliance now are going to be encouraged to comply, because now there are consequences for not compliance. It has also made things a lot clearer for those who really want to comply but have had difficulties about understanding what is expected of them. Now clarity has been brought in. So then, even from the academic, it's been very, very exciting, because now areas that had not been explored before are now opportunities are there to explore. So it's what I see in the public and from all the stakeholders is excitement.
When the new regulations were released, that is the transfer pricing regulations 2018 were released, we followed you on the seminar circuits. That is when you went from seminar to seminar. What were you telling the public?
Tax business requires a lot of communication. communications breaks them down, allowed the public to ask questions, and the tax authorities is able to provide guidance. And so the essence of our going out talking to the public was to make them to understand the provisions in the new regulations, how it affects their compliance, and what will be the consequences of not complying. And it was also an opportunity for the FIRS to answer questions, a lot of questions that have been agitating the minds of the people concerning transfer pricing in Nigeria. It was an avenue for us to do that, and that was what we did in all those outings.
Let's share with you clips from one of those seminars.
Consider here a situation where you are constrained by the activities of maybe your parent company offshore. What's your view on the rules, and maybe on that point as well, and then anything else you'd like to share?
For me, the fact that they are even revising it is a step in the right direction. We can talk about the changes that need to be made, and I feel most people share my sentiment that I have with some reservations on some provisions. But the fact that, like George mentioned first, is clarity on the documentation. Before, different people believe this is what is required. Another person tells you, no, this is what is required. And so there's no consensus in terms of documentation. But the revised one has the 3-tier as prescribed by OECD, and everybody's fine with that. Now, in terms of information, for example, you may request for a document. It's a big organization. And in my organization, we operate in more than 138 countries. And then at times you are asking for information. And then you may have a case where you are requesting for an information and the person that is there is even on vacation. And they tell you, okay, you have to wait. So there are different, constraints that you may have in that. Not that intentionally you don't want to provide for that.
This new one, has it been able to cure the mischief that was inherent in the old regulations? Now, for example, you look at the size of the two regulations. I have the old one here. It's about 19 regulations of about 14 pages. Now, both the regulations and the forms. There are forms at the old, behind the old one. Now, the new one is about 28 regulations of almost 40 pages, without the forms. Without the forms. Now, the forms themselves form part of the regulation. And the new one revoked the old one. Now, when you revoke, you also revoke the forms. So the question is this: if I fail to file the declarations, or because in the new ones they say you must file based on the forms as prescribed by the FIRS. Now, the forms that we have prescribed have been revoked. So if I fail to file the new one within the time, you come and you tell me, I am late in filing. Pay 25 million. The question is, sir, there were no forms.
We had no forms.
Then also the definition of the connected person, I believe, is too wide. If you follow that definition, it means that your bankers too are connected, because their actions, whatever they do, influence your economic decisions. We need to streamline it, because we have legal definitions of connected person. We have them in CAMA, we have them in even the laws, the tax laws, and we cannot go outside it. If the tax law says this is the connected person, this is how you determine it, you cannot go outside it and begin to import this. I'm only bound by what the law says. Remember, tax is statutory. You can't go outside it. So I commend the FIRS. They tried at least to tie payment with substance.
Funny enough, I stand to differ from my other colleagues, and that is because I feel this review is long overdue. I have been hot since 2012, when the TP regulation came into being. A number of loopholes that we had in that 2012 regulations. I'll create a scenario where you sit here in Nigeria, and somebody out there at the group level have to make call, just link discussion with you for like 30 minutes to ask you, so how are you today? What do you have on your plate? Okay. You are the one telling this person everything you are doing. And all he's doing is, Okay, right. And at the end of the day, we ask, okay, so what you have on your plate, how do you want to address it? You still provide responses, what I want to do. You say, okay, So make sure you keep us posted when you are done. And so at the end of the quarter, you get a bill on Nigeria. Is that fair? That's the truth. And so you get a bill that will say, for technical support. Then the question is, has there been any support? What value has this guy added to talking to me? Even when you come together at group level and you are discussing, you see that this person is like 10 years far behind you without experience. These are part of the loopholes that FRS ought to have addressed long before now. In terms of pricing, items that could be sourced in other markets that you know the prices, because the prices were not capped in the 2012 regulation, the parent company can decide at what price it's going to sell to you in Nigeria. The fact that you are black does not mean your brain is black. The truth has to be told. And if somebody is telling me that somebody is on leave, for crying out loud, nobody goes on leave for more than 25 days in a year. Now the regulation is out, can we plan? Whoever failed to plan is preparing to fail. So plan ahead, get your master file in place, get the local file in place, such that when they are called for, have them on your archive on the server. When they are called for, you pull it out and you submit to the revenue. You want to go for equity, go with clean hands. If you don't have anything to hide, there shouldn't be any excuse like they are not giving it from the region. Why is somebody sitting on news in the region? Right. This is long overdue, and I say, well done to FRS.
When I see this, what looks like a crowd, I really was touched. I really was touched that there are Nigerians who are willing to comply. I mean, my good friend here knows what it charges to do you a TP documentation. I don't know it. But he knows what he does, how much it charges you to do a TP documentation. Now, let's assume that my brother and I were in the same kind of business. Our turnover is about the same level. But you look at him, he looks very gentle, he looks very angelic. So he's a very compliant person. So when we say, do contemporaneous documentation, he goes to Banfo and says, Banfo, do me documentation. And this guy gives me a very big bill. Me, I'm the typical one. So what will they do to me? And then they ask us to submit documentation. I don't have anyone to submit. He has paid big money to get his own submitted. And then the law caught up with me and slapped me on the wrist and said, don't do it again, just go away. Have I been fair to this guy? So the intention, therefore, is if you have not complied, you shouldn't have an advantage over the man who had complied when you are caught. And definitely we are going to catch you. So it should actually be a regret and say, oh, probably I should have just paid 6 million for this thing and I will be home and dry. That is the reason in our head in setting those numbers. They were not arbitrary. We went to the market and said, what does it cost to do ATP documentation? And then set the penalty around that range so that you are not making any gain by not complying. Forms were revoked. Not true, sir. In the 2012 regulations, we had forms appended to it. But we didn't even use that form for one day. Those of us who are in practice, we know that even those forms that were appended were not used for one day. Not a single return was filed with that. Because just like everything that man does, you do it and then you say, oh, I could have done it better. And so before we even started, we saw flaws in those forms and we redesigned them and were communicated to taxpayers. And so people have been using that form. Even that form, we have revised it again and again. And if it is something that you are going to be revising, why do you want to cast it in stone? Which was why the regulation says it will be as prescribed by the service from time to time. So
Indeed, sir, there are forms.
Thank you.
As to the issue of the penalties attached to non-provision of documents, just a few things I'm going to say here. Number one, are we talking of members of the same family, or are we talking about strangers? That's question number one. Yeah, your brother could be in Seychelles. Your uncle could be in Russia. But you are still a member of the same family. Number one. Most often, even all the profit you make here will still end up with that same person. Because don't forget, most often you only have minority shareholders in Nigeria. The majority shareholders are there. So, what you are doing here is actually affecting the profit there. It is not true to say, after all, the entity there is not under audit. I can tell you it is under audit. Because the result of the Nigerian operation is going to be consolidated wherever they are. So it is in the interest of that guy to provide that information. Number three is that if you look at the regulation itself, I think it's regulation 14, provides for extension of time. Only that there are conditions. And what are the conditions? You must make your request before the due date. And of course, we are already working on a guideline which is already going to be published very soon, to tell us even operation of that. So if you have good reasons why you are asking for extension of time, inform this FRS. The FRS will look at your reasons and communicate to you and say, okay, yes, we agree with you. We give you this additional time to do so. But just like Mufuluka said, how many people take 2 months holiday in any of our multinational companies? It's gone on holiday for 2 months. I'm not sure. But you still see people asking for extension of time, 5 months, 6 months.
Oh, wow, very interesting.
We also understand that the 2018 transfer pricing regulations impose administrative penalties for non-compliance.
There are administrative penalties for failure to file returns, failure to keep adequate or required documentations, failure to respond to requests for information from the tax authority, and also providing incorrect or wrong or false information to the tax authority. All of these have different levels of administrative penalties, and like I said, it is to ensure that people comply voluntarily.
Relevant taxpayers, that is those who have transfer pricing issues, have up to 31st December 2018 to fulfill all pending obligations pertaining to filing of transfer pricing declaration, making disclosures of controlled transactions, submission of transfer pricing documentation. Do you want to elaborate on these?
Yeah, sure. I'll be glad to do so. Yeah. Like we said before, the 2012 regulations had no administrative penalties. And because of that, we noticed that a little lax in compliance. Mm-hmm. And now, when this new regulation came on, there are provisions for administrative penalties. But again, like I said earlier, a lot of people who did not comply didn't do so because they wanted to disobey the law. Now, so what the service then had done is to say, okay, let's give people the benefits of the doubt. Do not start imposing penalties from March this year. Mm. Rather, give the people enough time up to the end of this year. Those who have inadvertently omitted to comply or provide a piece of information can then do so. And then we then know that those who will not take opportunity of that window are actually not willing to comply. And then the penalties imposed by the regulation can then be administered.
If I place the 2012 regulations side by side with the 2018 regulations, what differences will I immediately notice?
The first thing you will immediately notice is the size. because the 2018 regulations are bigger in size. And that is because, like I said, there are more provisions, more definitions that has come in. Then, from the technical point of view, you will find out in the old regulation, we didn't have provisions on intangibles. In the new regulation, we have provisions on how to deal with intangibles. In the old regulations, we did not have provisions of how to deal with intergroup services. We have that in the new regulation. In the old regulation, the transfer pricing documentation did not break it down as to what exactly is expected. Whereas in the new regulation, it told us you must have a master file, you must have a local file, and then, of course, you must do the country-by-country reporting. So the details you find in the new regulation is much more than what we had in the old one. The clarity of what we have in the new regulation is better than what we had in the 2012. And then the simplicity of language. The whole regulation was written in the usual legal way of writing things, which sometimes can be a little bit cumbersome for the ordinary minds to understand. The new regulation we have written in simple English. If anyone can read a primary two book, English book, will be able to read and comprehend the new legislation. So, these are the few things I can say as clearing differences between the 2012 and the 2018 regulations.
With all of that, what lessons have been learned?
The lesson that have been learned is that what we should start now, we shouldn't push it tomorrow. It took us a while as a country to start transfer pricing. And by that, a lot of things with our compliance were not very appropriate. So that's one big lesson. And so there are other areas, not only in transfer pricing, not only in taxation, there are some other things that other countries are already doing within the economy setup that we too should, as much as possible, ensure that we plug into that. That's a big lesson. Another big lesson is that Nigerians can do things right. Before we started the transfer pricing, everybody said it can't work. But 6 years down the line, Nigeria has shown that it can work, that we can do things right.
Interesting. Now, in all of these, what help are you getting from international organizations?
Nigeria as a country is getting a lot of assistance from the international community, not just only for the FIRS, even for taxpayers, for tax agents. There are a lot of training that are available, which a lot of time you don't really have to pay for, because you have experts from other countries who are willing to assist the country to grow capacity in transfer pricing. In addition to that, we also receive advice as to current trends in transfer pricing. And that is why Nigeria belongs to the international tax community, very active. For example, the chairman of the Federal Revenue Service is currently the chairman of the African Tax Administration Forum, which does a lot of work in this area. He's also a member of the UN Committee of Experts for Tax Matters. And all of these organizations, in one way or the other, are assisting the country to grow its capacity, not just in transfer pricing, but in taxation generally, and tax policy formulation, and the like.
We're coasting home. But before we do, is there anything you would like to tell the taxpayers?
Yes. What I would like to tell the taxpayers is be clear in your disclosures. Comply with the regulations and all the tax laws, and ensure that you meet all your obligations. Do not engage in transfer mispricing. Understand that the cost of compliance is much cheaper than the cost of non-compliance. And if you want more information on any of the tax issues, including transfer pricing, you can get to the FIRS website, or you can visit our head office at the Revenue House in Abuja, or you could come to the office in Ikoyi along Awolowo Road, and you can discuss with or any of our tax offices all over the country, and then you will get properly advised on your tax responsibilities.
All right, thank you very much, sir, for that. We thank you for watching. Have a great week ahead. And from Chiamaka,
have a beautiful week ahead.